What's good, guys, and welcome to the weekly market preview here at ElementaryFX. For this week, we're looking for potential trading opportunities on the higher time frames of the Euro USD and the USD franc. And as you know, here at ElementaryFX, we go through a simple analytical process called the SFR process. S stands for structure, F is for Fibonacci, and R is for RSI. And before we start on any of our analysis, I'd like to say a few things about structure and why we value structure more than anything else in our analysis. The reason why we place that much importance in structure is because a pair could have major Fibonacci levels lined up. It could have RSI oversold or overbought, but if there is no structure in the form of resistance, support, or consolidation recently in that area, is that trade really worth taking? I'd say no, because time and time again, price seems to respect structure even without any Fibonacci confluence or other technical factors involved. You can develop a structure. You can develop a structure-based trading plan. I guarantee that you will do well. However, confluence of other factors will filter out the low probability setups, and that's why we teach the simple SFR process. If you're interested in learning it for free, you can use the link below and sign up as a junior member with the discount code launch100, and you'll have access to daily videos where you go through this SFR process that we always talk about. However, if you want a more in-depth approach to this process, you can sign up for our elementary course where we go through this SFR process all the way up to trade management in a one-on-one based course. So now that's out of the way, let's begin with our analysis. The first thing we want to look at will be the Euro USD on the 4-hour chart. And in this trade, we'll be looking for a potential opportunity to get short in this market. As we can see right here, we are in a bearish mood. So naturally, we identify the trend, and the next thing we want to do is to predict the movement of the pair in the future. So now that we predicted that price is in a bearish mood, because the trend is your friend and we're looking for a short entry, we need to decide how we want to enter the market, and this is where SFR process comes in. The first thing we want to look at is structure, and the nearest form of structure we can see will be this area right here. As you can see, we have this is a decent area for structure because we have resistance here, we have resistance here, we have resistance here, a bit of consolidation over here. So this has been a highly respected area of structure, suggesting that if price were to come up into this area, price could react very well to this area of support and resistance then support, and we could look for a potential short opportunity here. So now that we have structure out, let me just scroll up to see if we have any more structure. We have support here, we have support here. So just look left if we have any. Not much recently, so that will do, because this has been respected a lot in the recent past. So now that we have structure out of the way, we will look for potential Fibonacci levels that can confluence with our structure area. So if we were to use a Fibonacci retracement, we could be looking from this swing low to this swing high, and let's see what Fibonacci level brings us. We have a swing low to swing high, and we have a potential 0.5 level at that area. As you can see, the 0.5 lines up very nicely with our structure area. The next one we want to look at would be potentially this level right here. We have a swing high to swing low, our most recent swing. And if we were to take a Fibonacci retracement from swing high to swing low, we could potentially get a 382 at that level. As you can see, the 382 lines up very nicely with the 0.5 level that we have identified previously. The next thing we can possibly use will be a Fibonacci retracement, a Fibonacci extension of this move. So if we take a Fibonacci extension, we have a swing low to swing high, back down to swing low, and you can see that a 127 level lines up very nicely with our previous Fibonacci retracement levels. So this would be a zone that we can identify as a potential decision zone, meaning that if price were to come up into this area, we could potentially look for a short opportunity. If you want to get more fancy in this analysis, you could possibly use an ABCD pattern, where we have this move right here, A to B, and an ABCD pattern means an AB move will be equal to the CD move. So if we were to copy and paste this, we have a retracement right here. If we were to copy and paste this to our nearest retracement, we can see that the CD completion completes right in our decision zone. So this would be on the 4-hour chart, and if price were to come up into this area right here, we could potentially look for a short opportunity. If you would be more conservative, you could wait for price to have a double top before you look to short the market. If you wanted to include RSI in this, you could possibly wait for price to make higher highs. However, the RSI could make lower highs, suggesting the weakness in this trend right here, and you can short the market like this. Alright, so this was the Euro USD on the 4-hour chart. The next thing we want to look at will be the USD franc on the daily chart. And in this analysis, we'll be potentially looking for a long opportunity. And the first thing we always do, like I always say, I always repeat that the first thing we always look at will be structure. And the nearest form of structure, as you can see, we have a very nice level of structure here. Let me just move it down a bit. Why is this a good area of structure? Because we have, so let's just switch off my magnet for you. We have resistance, we have resistance, we have resistance. We have a lot of consolidation over here. And if I were to look left, you can see we have resistance, we have a support right here. If I were to look left some more, you can see that we have a bit of a breakout here, a bit of a breakout here. And yeah, so this would be a very, very good point to get in a short opportunity, because price has respected this area. We have resistance here, so we expect resistance to turn into support and support turn into resistance. And in this case, this resistance right here could potentially turn into support if price manages to come down into this area. And like I said before, if you develop a structure-based trading plan, you could just simply base your analysis and trades off structure, which is a very decent trading opportunities, because you could just wait for market to come down into this zone right here before you long the market. However, we don't only look at structure. In our SFR process, we look at Fibonacci. So let's look for potential Fibonacci levels around this area right here. I'm looking at this swing right here. We have a swing low to swing high, and if we were to use a Fibonacci retracement, let's just have a look. Swing low to swing high, we potentially get a 0.5 level in that area. As you can see, the 0.5 level lines up very nicely. And the next thing we want to look at will be a Fibonacci retracement of the nearest swing. The most recent swing would be this swing low to swing high. And if we were to use a Fibonacci retracement of that, swing low to swing high, we potentially get a 618 0.5 level, also with that previous 0.5 level. 0.5 isn't a true Fibonacci level. However, the number 0.5 is a very whole number, so it's a very psychological number where traders look to enter the market. So we can build a zone for entry like this, and we could possibly wait for price to come down into this area before we long the market. However, as you can see, price has been making lower lows like this. So if you were looking for a potential short opportunity, we can use the same structure area and wait for a breakout of that structure area that we have identified, possibly a close below this area right here, this identified decision zone, and we could wait for price to retest this area, possibly in the form of a double top, before we go short in this market. Let me just see if there's any more Fibonacci levels we can use. We have nope, this seems to be the only Fibonacci levels that we have. Confluence of 0.5. I don't think we have any extensions. If I were to zoom in on, let me just remove this for you. If I were to zoom in on the 4-hour chart, do we have potential opportunities? We have this move right here, and we also have a retracement, so we could use this recent swing high to swing low, this one right here, for Fibonacci extension. Let's have a look. Swing high to swing low, back up to swing high, we potentially get a 1618. 1618 level lines up very nicely with our 0.5 level, so this would be a decent area for a potential long entry. Or if you're looking for a bearish move, you could wait for a close below this area, suggesting that price wants to move past this level, waiting for a retracement up into structure before we short the market here. On the lower time frame, you can also see that this area has been respected, as we have support here, we have resistance here, we have a lot of support right here, and much more consolidation and a lot of wicks rejecting this area right here. If I were to spread it out for you, we can see that price entered into this zone before rejecting it many times in the recent past. So this would be a decent level to enter if price manages to get up into that area. Do I have a Fibonacci? We have a 0.5 there. So this would be the analysis for the USD franc and the Euro USD. I want to thank you guys for joining me on the weekly market preview, and I'll see you guys on Monday for our daily market analysis. Thanks guys, have a good one.